Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, December the 5th. The year's 2021. Let's talk trading. It's time for the weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. Looking at the week, you can see we gapped down, but we've already filled the gap. But we still, on the pound dollar that is, but we still have a few pairs, a handful of pairs that haven't filled the gap, so you might want to take those trades. This month, December, last month of the year, we're going to talk about keeping things simple, fading the gap, the open gap on Sunday/Monday, depending on where you are in the world. Can be a very profitable trade. We're putting in the opening range for the week. We're below the opening range for the month, and we're below the opening range for the year. Right now, we're 61 pips below the monthly open. And we are 407 pips below the yearly open. You can see the month is red. We put in that yearly low last month, and we've already tested it once. We'll see what happens. Right now, prices in the lower wick zone, monthly wick zone that is, lower monthly wick zone. And we know one thing, price does not like staying in the wick zones. We had an inside bar, I guess it was on Thursday. You can see we're still below that, the low of the inside bar by 32 pips. And it looks like we've got some action here inside bars. All those the gray numbers mean that inside bar action is happening along with the blue. So far, we are 7 hours into the trading day, but so far no pairs have hit 100 pips. We're above the weekly and daily open here. And with only 32, 31.9 range, there's no rat trades to be had on the pound dollar. Things seem to be really quiet. Okay, as we look at the pivot chart, we're below the daily pivot, we're below the weekly pivot, and we are below the monthly pivot. So far, I don't think any of those pivots have been hit. So we go to the pivot chart here. We haven't hit today's, we haven't hit this week's, and we haven't hit this month's. But with the week looking up so far, we're only about, 33, 34 pips away. It's possible we'll take out that weekly pivot. As you can see, we had a missed weekly in October. We had a missed in November. Only 2 missed pivots, weekly missed pivots this year. And now we've added a third so far. So let's see what happens. We are in the lower wick zone of the daily candle, previous daily candle. We've already popped out of it a couple times. So look to go long around 30, call it 39. And looking at the smart ranges, we had analyzed those on Friday. So far, you can see here we've got nothing to look at really as far as this week, because we're just starting out. So we'll have to wait and see what happens. And you can see here these ranges on the hour are minimal, so there's just no trades really to be had there. And part of keeping it simple is knowing when to trade. Obviously, this is not a good time to trade. There's not much movement. So you just take a pass and wait. The higher, low, lower, high chart, as you can see here, it's very compressed. Only about 3 pips between these. Once again, the setup isn't there, don't trade it. I mean, that's just a simple rule. If the setup isn't there, don't trade. Wait for the setup. And I think I mentioned about the simple price action exit the other day. We're using the TRO plot indicator here that I updated. I believe I don't know if I still have to put the latest update out on Crestlick or not, but I know I did put one update out there for you traders. But, looking here today, we're between the pivot and the low. Actually, that was a pivot point from the day before, because these are all previous day, week, and I believe month lines. Because, as I was saying, keeping it simple, just by using these lines, when the price hits it, if you trade with the direction price is moving, and like I said, I've changed over to use the M30 candles. Because I've seen how sometimes price will move one way during the first half hour and then turn around and come back the other way. So I want to take advantage of that. Let's see. Oh, and I did have a question out on YouTube land. Somebody was asking about trading the 30-minute and then waiting for a pullback on the 5 and then getting in. And I was saying, yes, that could be profitable. I mean, you could see here, price went up, started to pull back, pulled back inside of this candle here, and then turned around on the M30. And if we look at the M5, you can see that price action once again. But once again, this is a Sunday/Monday opening candle. There's really not much in terms of action at this time of day. We'll have to wait for the London boys to wake up, the London traders, who might be girls and non-binaries, so keeping things politically correct. What's this world coming to, right? And since it is a new month, on the TRO time, it says averages realign to form a top in early November and price slides in the mid to late November. That definitely was true. It says after this, the averages diverge again. So if we look at the month chart here, you can see November had definitely slid, put in the high in the beginning of the month and just slid right back down. I'm trying to think if there was any other questions out there that needed to be answered. I don't think there was. But if I missed out, let me know and I'll definitely answer your question. I think that question, somebody was putting it on the an old 3-level ZZ video I made. I think it was back around 2017. They looked at it, looked at the videos. But the thing about keeping it simple is, it's easy to say, but sometimes it's really hard to do because you really have to fight human nature. Some of us have this shiny object syndrome, indicator-itis, I like to call it sometimes, those new indicators. Because I still look at other people's code and see what they've done and see if there's anything I can learn either from a trading standpoint or from a coding standpoint. But as far as the trading standpoint, it just seems to me it's just so hard to beat these simple horizontal lines. Um, I People talk about confluence, support resistance, supply demand, all of that. And I'm not saying that they're wrong and I'm right, not at all. I'm just looking at what they do, and I look at what I do, and it just seems how this is one simpler, and two, usually I'll get in at a better price when you look at it. So, but once again, these videos are for educational purposes only, and your results may differ from mine. So, for example, here, back on Friday, even with the NFP news, I mean, it crisscrossed the daily open, and that was you can see here, crisscross that daily open, go down to M15, and even if you want to go all the way to M1, you can see what happened. And then it just kept coming down. You look at the M5 chart, same thing. But sometimes you might have to wait an hour or two for price to get to that line, but it should be okay because that's where the profit is. So you might say, but we've got 20 pips to the upside and 20 some to the downside. So you got to wait for price to move all out. Why don't you take the trade? Why don't you just pick a direction and trade? It's like, well, you can do that. But as you can see here, there's just not that much movement at this time. Just be patient and wait. I mean, the chart's telling you a story. It's telling you where price is gone. What happens when price gets to this level? What happens when price gets to this level? You can see right here. We say look left, and look what happened on the look to the left. And I would bet that's the open right there. It zoomed up. It gapped down, fade the gap. Well, the only problem is I'm not sure what price was, and sometimes when the market opens, there could be a 10 to 20 pip spread, so you'd actually never get in at this level. But that's just how it goes. So, fellow traders, that's it for the weekly open and gap. Once again, feel free to ask questions, and hopefully I can answer them. I usually answer them in text and or the video. So when you sit down at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. Shout out to another, I don't know what you call it on Reddit, but somebody else joined up on my Never Lose Again thread or Reddit. I'm not really sure what they call those things over there. So anyway, this is the Rumpled One, over and out.